Welcome to F50 Summit, Austin 2021. Today is our first day of our Austin 2021 conference for the Austin Investment Forum. And we are very happy to have a local investor actually just moved from Silicon Valley January this year. Please welcome the managing partner of iFly.vc, Shen.
Good morning, everyone. Hi, David. Thanks a lot for having me. It was a great pleasure connecting with you back in Silicon Valley and now moving together to Austin and join your conference.
Yes, welcome to Austin. And you were very active last few years, made several quite visible investment lately. And maybe I want to invite you to introduce your fund and yourself a little bit, particularly the sectors and the stage of investment you have made and you're looking for.
Sounds good. Yeah, so I'm a PhD by training. Spent a couple of years in the industry getting my MBA. Started my career in the venture business back in 2009. The last 12 years has been a great journey for me in terms of both profession and career development. Spent the first 7 years working for other funds, the most recent one called Formation 8, where I did a bunch of interesting investments such as Oculus that was acquired by Facebook for $2 billion. 2016, I became an entrepreneur to start iFly as a startup fund. Our current AUM is short of $100 million. We are investing out of our second fund. Our investment strategy is to really focus across the value chain of commerce, going from e-commerce, retail, supply chain, logistics. Whenever there is underserved demand across the demographics in the United States, which is always a $1 trillion upgrade of opportunities, that's where we look for the next generation of innovation and startups. Our stage focus goes from pre-seed to Series A. We either lead or we follow. Our check size can go from a couple $100,000 to a couple $1 million. So with that, we have a lot of dedicated effort to helping our entrepreneurs. We have no upper limit in terms of how much time we spend because we have a concentrated portfolio. Happy to talk about some of the real examples in our past couple of years of experience. Definitely look forward to this conference. Thank you again, David.
Okay, great. And again, welcome to Austin. So maybe you can share us what type of investment you'll be looking in Austin and Texas.
Yeah, so before I moved to Austin, Texas this year, I used to travel here quite a bit. Even during the time at my previous fund, had a couple of investments in Texas that turned out to be a great outcome for both founders and investors. So I was already very familiar with the startup vibe and the energy here across Austin, Dallas, Houston, and so on. I've already got connected with a lot of local people, both founders and investors. So before the move, it was pretty clear to me that it is becoming a very exciting new hub of innovation that investors should not want to miss. So out of the relocation, because we focus really on the value chain of commerce, whether it's B2B or B2C or B2B2C, now those are all the themes we look at and engage with founders. Out of the founders we have talked to, obviously, just given the last couple of decades of a large corporation, there are always smart and restless people who might used to work for those companies, but now ready to embark the next chapter of their journey. So we see a lot of interesting opportunities across e-commerce, consumer products, and also those enterprise solutions to help commerce players do a better job. That's what we are excited about.
So maybe the other question is, since this is our Austin 2021 conference, what do you saw the difference between Silicon Valley's ecosystem versus an Austin, Texas startup venture ecosystem?
I think in many ways, my view is it's getting more and more similar, right? In the past, a lot of people say, Silicon Valley could be the center of the universe. I used to hold that opinion. When I first moved to Silicon Valley, I thought to myself, maybe this is going to be the place where I want to spend the rest of my career and even life. But things have evolved and changed quite a bit over the last couple of years. Partially because most people realize, unless you're really working on some deep tech, frontier tech, you might want to co-locate with the institutions like Stanford or MIT. But there are many sectors which do not require a the top-notch scientist level kind of founders to start a company. And people realize you can actually now start a company in many other pockets of the country or even the world. And smart and diligent people start looking for new places to work. COVID certainly accelerates people's thinking where they can build a team, they can have a life, and grow their family. So no doubt, a lot of people start looking to move out of California to other parts of the country. So that's why I'm saying, because of the migration of smart people and talents to these new hubs, including Austin, I see more and more similarity of the mindset, of the skills, of the level of calibers. And so that's why for me to relocate to Austin, partially is I want to also be proactively engaging the entrepreneurs here in Texas. But in a way, flying from Austin, Texas to other parts of the country, especially East Coast, is definitely a lot easier to manage to go all the way from California to the East Coast. So in that regard, I think as an investor, we are in the job to see the non-obviousness in many sectors and innovation. But certainly the migration of the talent is a trend we cannot miss. And we should always figure out a way to proactively and productively engage the founders and find the next exciting opportunity to invest.
Great. So the other question I want to ask you is about the sector, since you mentioned a couple sectors in your investment. So one of the biggest news is that President Biden proposed a couple $1 trillion like infrastructure projects, and also, of course, there's other government plans to help small business, help businesses to grow. So from a venture capital perspective, so with those proposed policy, what are the impact to the earlier stage investment you are in? That's the first question. Related question is that what are the sectors which you believe will be more beneficial from those policies?
Yeah, so I think, as an investor, we certainly watch closely how the policies shift. But in my view, we always have to keep in mind some of the policy shift may not change overnight, or even for the impact of those policies will take sometimes months or even years to make a real impact on the entire value chain in the infrastructure. So because the fund has a finite timeline for investment period all the way through exit. So with that in mind, a lot of the derivative sectors that can benefit from those policies with a more high capital efficiency to drive the growth with a better cash efficiency, that's where conceptually has a better shot. By that, and by contrast, there are these other large and huge capex heavy projects that benefit from the policy. But in that regard, it does not necessarily change the entire risk profile of early stage investment. Let me just give you some recent examples. When we talk about urban mobility, which is a very exciting area, people talk about dockless bike sharing, and even before COVID, there were plenty of companies that raised a lot of capital around the world. No matter how fancy the term might sound like, essentially we are dealing with a development of transportation infrastructure, if we will. If we don't pick a more fancy term, the infrastructure and nature of urban mobility, such as dockless bike sharing, means we do have to face lots of capex infusion upfront before we see the cash flow coming in. So in that regard, the division of the opinion is not necessarily good or bad investment. It's also coming to a fit for investors to think about whether that type of investment is the right type and with the right kind of a risk reward profile for early stage investors to adopt. So in that regard, some of us chose not to invest, but others embark the journey. But it's something we have to make a informed decision in light of all the policy change.
Okay, thank you. Let's add another variable to that question, the pandemic. So right now it looks like, particularly in North America, is recovering, and in I know in Texas and many places in the shops, mask is not required anymore. I hear that in California is opening very soon. So there were many different tech startups were the big beneficiary of the pandemic, good or bad, but they solved some of the problems and the challenges. They raised lots of money, but now the pandemic is ending. So maybe there's impact to those companies. I give you one example. I think Clubhouse was booming during the pandemic. Everybody stay home, just want to listen and talk. So now people are in a real hurry to travel and meet people that have been locked in their home for so long, nearly 1.5 years. And so the high demands of meeting in person and high demands of going out, travel, lots of stuff. So that changed the impact to the companies. For instance, I know you invest in Win-Win also is a great example of significant increase during the pandemic. What are the potential impact of ending of the pandemic?
Yeah, so David, this is a great question. With or without pandemic, what we should bear in mind is, for any startup, whether for business enterprise or consumer service or products, the real question is what's the value proposition a company is creating and how much the target customers are willing to pay for. I think that's essentially the business 101 type of questions. And pandemic might skew the breakdown of the structure of value creation and proposition. For example, when you touched on this company in our portfolio called We, for those of you who are not familiar with the company, they have fast grown to become the largest online grocery for Asian and Hispanic type of food, beverage, groceries. And they deliver across over 20 metropolitan areas in the United States, East Coast, West Coast, including Texas and Midwest as well. For any orders above $35, delivers free of charge. They also start mail orders, business. So a promotion of our portfolio company is if you go to saywe.com/en, you can really take a quick look at what they offer. So when we invest in the company, it's not because, they just provide convenience of delivery on top of the Asian or Hispanic grocery. There are many ways that the company differentiates from other players. For example, they have a very unique commercializing methodology such that 80% of their merchandise are not even easily or readily available in the brick and mortar specialty food stores. And for those that are available offline, often their price is a lot more competitive. And when you compound that with free delivery for a minimum of order of $35, that value proposition is very strong. So COVID certainly gave them extra tailwind to boost the business and growth. And they also took the challenge very, very well, because on the one hand, they saw the demand. On the other hand, they have to take care of their own employees, make sure everybody is safe. Right? But as business started reopening, or even partially last summer, we recognized there were other players in the market. The volume actually started dropping by a significant amount, whereas in We's case, the numbers still continue growing very fast. At the same time, the contribution margin is still very, very healthy. In our view, if a player, essentially charges an average American family extra $10 to $20 for a delivery that gives you essentially the same products where you can access directly from HEB or on West Coast case, it's a Safeway part of the world, that value proposition is not as strong, right? So most American families don't have that extra $20, $15 per week to access those type of merchandise where they can do directly. And by comparison, again, we started the differentiation all the way from merchandising to delivery. So that's why we think even after COVID, impact is diminishing, their growth and attractiveness to the target customers remains very, very strong. And for us to look for new opportunities, the same kind of thinking applies to other opportunities and startups we are looking for potential investment.
Okay, great. Thank you, Shen. So my last question, more important question for a couple of investors who are new to Austin. So you have a strong roots in Silicon Valley for a very long time, just like me. And actually, I met a couple of investors, Jelene from Aurora Equity, and Andrew from 7BC, plus a group of people. So one of our goal for the conference to build stronger connection with Austin, Texas, and the Silicon Valley. Where do you see the values can be brought in by connecting the two ecosystems, particularly for people like you?
Yeah, so I tell a lot of my friends to take a look at Austin, Texas. Come visit. And as much as we think we get to know a whole lot about the whole world, startup, and everything, it's inevitable that often our sight gets siloed, right? And we get comfortable and complacent what's in front of us. It's good and bad. It's good for those of us who are audacious enough to embrace the risk and seek opportunities. And if you are able to do that consistently and successfully ahead of most of the crowd, that's where early stage venture capital investors identify those potential alpha as part of the return profile. But what is not so good is, if we think about the migration of the talent, right? So how we get more and more talents coming to Austin, it is kind of to me, part of the mission I'm trying to do to serve the local community as much, as soon as I moved out here. So that's why I am telling people before they make a decision, come and visit, right? Get an understanding of what Austin is all about, what Texas is all about. I recognize people have different perceptions when they don't know a whole lot about. So even spend a weekend or coming, to attend this conference, just get a real awareness in their mind to start comparing it. In many conversations, what I told my friends is I try to plant a seed in their mind such that as they started exploring, it will further facilitate. And over time, I already recognized from the first time I came to visit in Austin, Texas, that was spring 2004. And the last 6 and 7 years saw a lot of difference in change and growth, especially the last couple of years. And I do believe the trend is going to be only going stronger in the coming years. So for those of you who are still hesitant or debating, talk to David, talk to us. Happy to chat more and share more about our experience so far.
Okay, great. Thank you, Han. So time flies. I really hope to meet you in person very soon. And This is a 3 weeks conference. We are hoping to host a VIP reception very soon. Okay, thank you, Han.
Thank you, David, and thanks everybody.